Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the world's investors gird for the inevitable as hours from now, President Trump unveils country-based tariffs, making sense of it all for Philippine investors. Moody's Analytics economist Sarah Tan joining us in Singapore. The Philippines Purchasing Managers Index for March fell from February, marking the third consecutive month of slowing growth, rounding out the first quarter for the year. Breaking it down for us straight from the source, Jingy Pan of S&P Global Market Intelligence. And the first trading day of the new month, the second quarter of 2025, kicks off in earnest following Monday's holiday. We'll follow the money with Manuel Leco, the chief economist of Credit Ratings and Investor Services in the Philippines. The S&P Global Philippines Manufacturing Purchasing Managers Index fell below 50 points in March. The PMI stood at 49.4, easing from 51 points in February. Now, this marks the first contraction in 19 months, ending a long period of growth. Firms have scaled back production, new orders have declined, including from foreign clients. Hiring activity stalled, with companies saying they had enough manpower to meet demand. Despite weaker conditions, manufacturers remain optimistic about future demand. They expect growth to pick up in the coming months, driving confidence to a 4-month high. The S&P Global Philippines Manufacturing Purchasing Managers Index measures the performance of the manufacturing sector and is derived from a survey of 450 manufacturing companies. The index is based on 5 individual indexes measuring new orders, output, employment, among others. And a reading above 50 indicates expansion, below 50 represents contraction, while 50 indicates no change. With us now for more is Jingy Pan, the Economics Associate Director of PMI team at S&P Global Market Intelligence. So good to see you, Jingy. Thank you so much for joining us.
Well, good morning, Katie. Thank you for having me on Money Talks.
Yeah, you know, you've been watching and tracking the indicators all the way from where you're at on the Philippines for 5 years, the source of all the PMI data we get on the Philippines. Just take us through the March figures, because that completes for us the first quarter. And we saw that March fell below 50, and that's pretty critical, because now that means it's a contraction.
Indeed, Katie, and I like how you've just explained as well that the PMI itself is actually a combination of 5 different factors, but 2 of the biggest one that we certainly always urge people to watch, the new orders and also the output index. Those have actually also fallen below 50 for the first time in over a year, and at the fastest pace for both in over 3 years. This itself is actually highlighting, well, on one hand with the new orders, which is really demand conditions, lightening what we have seen across the comments coming through from Philippines manufacturers, pointing to increased competition. But I think it really reflects as well a story of just really that demand itself is actually getting a little bit dried up in that sense around the region. And that's leading to some of this more competitive pricing among manufacturers in the region as well. And on the other hand, with output production, which we look at most closely for, manufacturing production trends over there, that's also showing us towards the end of the first quarter, things have actually slowed down. So to a large extent, I think the bigger backstory here is also that some of the, positive momentum that we have spotted really from some of the front loading ahead of planned tariffs, as you talk about in a few hours, you might be hearing what's going to happen. But we have seen manufacturers putting in that kind of operations in response to the front loading, and that itself has actually much, kind of diminished towards the end of first quarter so far. And for the Philippines, I think, among the ASEAN economies, with the ASEAN manufacturing we published this morning, I think they are among one of the ones that's really seeing that slowdown coming through, Katie.
So in comparison then, and relative strengths, if you will, is the Philippines in the middle of the pack, or are we slowing faster than other ASEAN economies?
Well, so among the ones that have actually improved this month itself in March, we see the likes of Singapore, Indonesia, and also Vietnam. Thailand was a little bit more towards the middle when we talk about output, and of course with Philippines, yeah, it's actually in the lower half, below 50. I think this itself doesn't perhaps come across as so much a surprise. The likes of Philippines and the South Korea, Taiwan are among the regions where we are seeing more of this front-loading driven improvement in manufacturing conditions, well, dry a little bit faster, perhaps compared to some other regions, including, well, to Vietnam, Malaysia, these are the ones that are having a little bit more of this potential coming through with the electronics upcycle. For Philippines, though, I just really want to say our forecast colleague do still see quite a positive growth of around 5.8% for the year itself, but that's a lot seeing what's going to happen on the services side as well, Katie.
Which leads us to jobs and the impact that this has. I mean, we had caveats in the last round of reporting. We still had growth in new orders, albeit moderating, but we don't have that now. So what impact is this now having on employment? Are we losing jobs?
Well, the latest number itself is right smack at 50, so that is actually showing unchanged employment conditions, despite the fact that industrial production, I would say our manufacturing output itself had actually slowed down in March. So this itself is actually giving us a story of that. Well, we did see a bit of a slowdown, but I think a lot of the manufacturers in Philippines are actually still in a bit of a wait and see, sentiment. That itself, well, stemming from the expectations, I think at the start of this conversation, we have seen with the title as well, that confidence itself had risen highest in 4 months. To put it into context, that it is actually still below the long run average reading for our future output index, which is the only sentiment index where Philippines manufacturers tell us, do they expect output to increase, decrease, or stay unchanged in the next 12 months. So this is largely stemming from the fact that some hopes, I think, that's been told to us regarding the expectations that elections coming through and also potential for lower interest rates, that's actually lifting sentiment slightly among Philippines manufacturers. But on the long run basis, I think, yeah, a lot of them are also very much concerned over the impact on tariffs, on what that might actually mean as well for production in the next year.
Yeah, but that's assuming cost pressures come off. I mean, how are they looking in terms of cost pressures? The rate of charge inflation, that nearly leveled off last February. Did that carry on?
Indeed, well, we did see, the inflation situation, it is still actually, prices are still increasing both on the input price and output charges side of things, but those are only very marginal. If we talk about output charges, which is what we see the closest towards, factory inflation, I know at the prior to this itself, you also talk a little bit on producer prices. I think, we do see a bit of lag effect between what we have so in other words, our data itself on the prices side do actually provide a bit of a forward lead in terms of what the official numbers itself typically do. So earlier towards the end of last year, we did find inflation conditions being a little bit steeper, but that has already tapered off. And even up till now, I think we're only seeing marginal inflation, which altogether actually really bodes well for the interest rates to be further lowered by the central bank, given the conditions, especially from the manufacturing side. But of course, I think we do have to see the situation as well on the tariffs implications in the coming months. But right now, we're definitely tracking these, and that's not giving us a sign of concern yet.
And maybe midterm elections in just about a minute. How is the upcoming midterm elections having a boost on consumption spending, and how that's influencing the manufacturers' views at this stage?
A great question, Katie. So I think we talk about the sentiment itself actually picking up to the highest level in 4 months. I will say largely very much attributed to the fact that we have this positive sentiment over what the midterm election may actually mean for potentially better, infrastructure, disbursement, and so on and so forth. But over and above that, I think we're also seeing just that itself generating some of this optimism among manufacturers. While they kept employment unchanged, they've actually raised their inventory. So you're seeing stocks of purchases, stocks of finished goods, those have actually increased in our latest PMI readings, and that's showing manufacturers themselves potentially seeing that itself being a source of their higher production in the next couple of months post-election, and therefore they are keeping inventory. So we're going to monitor that situation because I think it matters as well for how production is going to be down the road.
Got that. Well, thank you so much for dissecting the PMI data for us, fresh off the list there. Jingy Fan of S&P Global in Singapore.
Thank you.
And the national government's outstanding debt hit a record of over 16.6 trillion pesos at the end of February. Data from the Treasury Department show it rose nearly 2% from January and over 9.5% from last year. The Treasury says the rise in the increase came from new domestic and foreign borrowings for public programs projects. Despite this, the Treasury says the debt, quote, remains manageable. The Treasury also said a stronger peso helped ease the impact of the increase. Economia Advisory and Research economist Reniel Erese says the government will likely borrow more this year, mainly from local sources. However, he warns a weaker peso could push foreign debt higher. The Philippine Producer Price Index for February posts a year-on-year increase of 0.8%. Figures released just half an hour ago from the Philippine Statistics Authority show the PPI standing at 97.9. Still, February's figures are down by 0.2% from January's 98.2. The PSA attributing the annual increase of PPI to the acceleration of coke and refined petroleum products. Other contributors include computer, electronic, and optical products, and base metals. The PPI measures the average change in price of goods and services sold by manufacturers and producers in the wholesale market given period. And also moments ago, Ayala Corporation announces that Japan's Mitsubishi Corporation has acquired half of the former stake on the e-wallet platform Gcash. AC Ventures Holding Corp holds a 13% stake in Mint, the owner of Gcash operator GXChange Incorporated. Through the 18.4 billion peso deal, Ayala and Mitsubishi will each hold a 50% ownership in AC Ventures Holding Corp. Ayala president and CEO Cesar Consing earlier said the entry of Mitsubishi would add meaningful value to Mint and the 94 million registered users it is serving. You're watching Money Talks on One News. Up next, U.S. President Donald Trump set to announce his final tariff plans in just a few hours. And Moody's Analytics will give us their prediction on inflation figures for March. Stay with us. Welcome back to Money Talks. I'm Cathy Yang. The world waits with bated breath as U.S. President Donald Trump is set to announce his final tariff plans this Wednesday, deemed as Liberation Day. Trump says he has settled on a plan but won't divulge any details yet. According to the Wall Street Journal, the U.S. president is choosing between two options. The first is to impose a universal tariff of 20% on virtually all imports, potentially affecting almost every single U.S. trading partner. The second is to levy individual duty rates, sticking with his so-called reciprocal tariff approach. Trump's dilemma highlights his conflicting priorities. He wants to generate revenues out of these tariffs and force other countries to lower their own duties or change certain policies. The White House says the duties will take effect immediately.
My understanding is that the tariff announcement will come tomorrow. They will be effective immediately. And the president has been teasing this for quite some time, as you know. He's talked a lot about April 2nd as Liberation Day in America. It would be taking place today if not for April Fool's Day. But tomorrow will be the day, and he's been talking about it for a while. And as a result, you've seen these companies make commitments to investing right here in the United States.
Canada, one of the countries severely affected by the escalating global trade tensions, vows to respond with retaliatory tariffs in a deliberate manner if Trump slaps additional levies on Canadian goods. The statement comes as the U.S. Senate prepares to vote on a measure undoing the emergency declaration Trump declared as a basis for tariffs in Canada.
We are going to be very deliberate in terms of the measures we take to fight for Canada, fight against these unjustified measures by the U.S. administration, but also to protect, to have that minimal impact in Canada.
Investors are on a wait-and-see approach, as reflected by the fluctuating markets throughout Tuesday's session. S&P 500 and the Nasdaq rebounded after losing points Monday. S&P is up by 0.3%, and the Nasdaq rises by 0.8%. The Dow falls by less than 0.1%. As for the Treasury yields, a 10-year inch lower on Tuesday to 4.156%, its lowest since December. And as for gold, prices notched down slightly just as well, closing at $3,118 per troy ounce. U.S. futures point to a slight decline when the markets open in New York later tonight Manila time. Both the S&P and the Nasdaq are down by 0.1%, and the Dow falls by less than 0.1%. Asian markets have opened Wednesday's session slightly up. Australia's ASX 200 climbs by 0.6%. South Korea's Kospi rises by 0.1%, and Japan's Nikkei 225 gains by less than 0.1%. Australia's central bank kept its interest rate steady. The Reserve Bank of Australia said in a statement yesterday, Tuesday, that it awaits inflation figures to return to normal on a sustainable basis. The RBA is also cautious about developments abroad, including Trump's tariff orders. Let's head back to Singapore, but check in this time with Sarah Tan, the economist at Moody's Analytics. Sarah, so good to see you again, and welcome back to the program.
Thank you. It's great to be back here.
You know, I was looking back at the time that we first talked, and that was February 19th. And I recall you saying that inflation is still the top risk to Philippine growth. In fact, our partner journalist at Business World wrote this up. As you see on the screen, inflation is still the top risk to PHL growth. And then on March 27th, about 6 days ago, Business World reported that your company trimmed its GDP forecast for the Philippines to below 6% for this year and 2026. So could you reconcile that for us, Sarah, that over a month ago, Moody's Analytics' concern was Philippine inflation, and then less than a week ago, it switched over to slowing growth?
Yeah, thank you. I think both are still really a key risk for the Philippine economy. The main downward revision reason for the Philippines is really the fact that President Trump was elected in the US. So prior to the election happening, we were expecting growth to hit the 6% mark this year. But after that happened, we lowered our growth to 5.9%, which is just slightly under the government's target, right? And this really reflects the shift in US trade policy between then and now. As for inflation, the whole tariff situation could raise global inflation, and that could disrupt, supply chain networks, which then could lead to things like isolated shortages and higher prices.
So what could change maybe in the next few hours? I mean, we're going to be hearing from Trump, Trump's Liberation Day pronouncements from the Rose Garden. In the order of risks now that we're facing, do you think it's going to be slowing growth or faster inflation?
I think definitely slowing growth first and then faster inflation second, only because the Philippines is kind of isolated from this global increase in inflation, if any were to happen, because Philippines itself has a relatively low trade surplus with the US, and so there is some risk of tariffs there, but perhaps less so than in other APEC economies, maybe like in Vietnam.
Yeah, knock on wood. I don't want to say the word, but I'm hearing stagflation. I mean, how much of a risk is that now that you say that the risk could be slower growth and then faster inflation?
Yeah, indeed, that is kind of the term that's used in the market, but I think we're not going there yet. The country is still experiencing an expansionary economy, and so we don't think we'll reach that point just yet. Yeah.
All right, I wanted to show here the inflation chart because we got you down for 2%, and in the last forecast, you got it right. You were the only one who got it right. That the Banco Central did not make a move, it took a pause. How did you come up with 2%?
Yeah, I think the 2% that we're looking at is really an easing slightly from February. And much of that will come from food inflation, especially due to the recent price cap on pork and the lower rice tariffs that we're looking at this over the late last year and this year. And looking ahead, I think we are expecting inflation to ease generally from last year. And a lot of that has got to do with some kind of stabilization in food supply, after the whole El Nino weather phenomenon that we had last year.
All right, so what is it going to be on the 10th of April? Are you looking for 25 basis points or 50?
Yeah, we do expect the BSP to trim the policy rate by 25 basis points when they meet next week. Again, the whole idea of easing inflation and a broadly stable peso will give the BSP that confidence to proceed with a rate cut. And of course, this whole lowering of policy rate would then support the domestic economy, at a time when uncertainties really cloud that outlook for external facing sectors like, manufacturers and exporters.
All right, I'm going to hold your crystal ball to account, Sarah. Thank you so much for joining us again. Sarah Tan of Moody's Analytics in Singapore.
Thank you.
And today's the first trading day of the month of April following the national holiday yesterday, Monday. The Philippine Stock Exchange opens this Wednesday up by 0.2% at 6,197, just below 6,200. Let's take a look at the Philippine peso. It has opened slightly stronger at the get-go, 57.20 to the dollar. With me now for more here in studio is Emmanuel Leico, the Chief Economist at Credit Ratings and Investor Services Philippines. So good to see you, Noel. Thank you so much for joining us.
Thank you for having me here.
Yes, so you've been hearing all that from our economists and market watchers from overseas. What do you make of it? The pressure of maybe slowing growth and then faster inflation?
Well, I think inflation remains, for me, a major concern. Especially now that all of this happening in the U.S., the tariff program of President Trump will have its aftershock when we hear what the total Trump tariff policy program is going to be like. I look at, well, the U.S. is a major trading partner of the Philippines, and since we import so much and export less, we might be importing inflationary impact of the tariff program of Trump. And everybody that I've heard of in the U.S. saying that the tariff is going to be inflationary, and that's not good news for us.
And we're not even talking about the midterm elections, which could bump up consumer spending. So are we looking at a pause on April 10th?
Not exactly. I actually, well, right now people are holding on their spending, holding out on their investment. Whatever investment program they had decided on last year, they're just basically continuing, and maybe right now they're watching what's going to happen in the next few days, few months, and make their perhaps a midterm adjustment in their investment programs.
Have you made your adjustments for the growth forecast, perhaps? I mean, all this wait and see is slowing us. I mean, you just looked at the PMI data. That has already contracted well below the 50 mark.
Yes, yes. Actually, we're looking at a slowdown. Well, last year we slowed down. We did not hit our program, our targets. In fact, the targeted 6% was already an adjusted target of the Philippine government. We still didn't make it. So right now, we're carefully watching events that would lead to continuing growth or a slowdown.
So you're holding out for what happens in the next few hours before you make the adjustment.
Yes, before we go sleep tonight.
I won't get any sleep for sure because it's happening at prime time, Manila time. But it still is the fastest growing economy in the ASEAN. Let's just put this into context. We are slowing, but not by much, because the impact, most of those I've spoken with say is going to be minimal, although there will be impact.
Right.
So put that in context for us on the strengths that we have in a case where we don't know what's going on overseas, but we can control what we can, given that we are a service exporting country,
Right.
more than goods.
Yes. My context goes back to the pre-pandemic period where during the pandemic we really dove down. I think we were the slowest economy, or we were the worst economy during that period. So being the strongest economy in terms of growth, I think we're just evening up what happened during the pandemic. So we're okay, but not exactly, comparable to what we should have been if the pandemic did not happen. And if the worst economy during that time was not as bad as we did during that period. So we're okay, but optimistic, I'm more hopeful than being optimistic. I hope that the ongoing political noise is not going to affect the economy. It's not going to hold back our investors, and remittances continue to be strong. I don't think these zero remittance really affected the Philippines. It's more symbolic than anything, But I think the remittances will continue to save the day for the Philippines. So yes, I'm hopeful that will continue.
Just very quickly, your forecast for the Philippine peso, now that you mentioned the overseas remittances.
It will remain stable.
57, 58.
Yes, yes. I don't think the earlier forecast of 59 and even 60, I don't think that's going to happen given the turn of the events right now. Even the US dollar is not getting that strong, considering that the tariff policy of the president is not really making headways in other countries. It's not being welcomed, definitely.
All right, we'll hold out for hopeful. Thank you so much. Noel Lingco joining us, our economist here in the studio of Credit Ratings and Investor Services Philippines. And before we go, the world's biggest watch fair is back. 60 top watchmakers gather in Geneva for the Watches and Wonders 2025, showcasing their latest top-notch offerings. Rolex has unveiled its newest Oyster Perpetual Land Dweller, packed with new technology, including a redesigned escapement and oscillator. Vacheron Constantin releases Solario, which doesn't just tell the time, but also the sun's position in the sky. And Bulgari is out with its showstopper, the Octo Finissimo Ultra Tourbillon, a thin wristwatch measuring just 1.85 millimeters, which is slimmer than a coin. And I thought people don't wear watches anymore because we got them on our mobile phones. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.